You previously told shareholders that you'd like to avoid a share sale and build up capital organically. What's changed? And it was a difficult decision to change and reverse that strategy.
Well, a couple of things have changed. One is we have changed our course with the Postbank.
Yeah.
The current team, we slightly inherited this plan to sell Postbank, which was fine. But I think we never made a secret of the fact that it was a capital raising effectively. Yeah. And our CFO, Marcus Schenk, and I have always said that given that it was a capital raising, it always had to make sense from a capital generation perspective. And it was always a strategic challenge. And the two were moving out of kilter. And we saw Germany improving as a banking market. We saw Postbank performing very well. It has, together with our Blue Bank in Germany, 20 million customers. And that's an asset not on the balance sheet that we didn't want to lose. So we decided that the best course of action for the group was to retain Postbank, and we needed effectively to finance that. The markets are also very strong at the moment, and we would like to capitalize on that by changing our agenda. We've been shrinking, we've been reconstructing, we've been changing the bank a lot over the past 2 years. And we want to move back into modest growth mode, controlled growth. And we just thought to do that, it would be helpful to add capital. And then finally, we were responding, I think, to the market. The market has been telling us that they still would like to see more capital strength. So we'd like to see our cost of debt come down, and frankly, our cost of equity come down a bit. And I think adding capital is the right thing to do.
But how confident are you today that shareholders won't be diluted again 2-3 years from now?
Well, we've set an ambition. We're using a regulatory target because it's the one the market tends to use of the Common Equity Tier 1 ratio. And we want to be comfortably above 13%. And that gives us a big buffer against our regulatory minima, or what we expect to be regulatory minima. And this exercise takes us above 14 pro forma. And we've announced some other capital release measures, the partial IPO of asset management, and then a number of disposals of very small businesses. But together they add up to probably around 2, if not a little bit more, of capital release. So taking it all into the round, I think that puts us onto a very firm footing. We don't see particular headwinds. Actually, the operating environment in the US, but also increasingly in the Eurozone, and especially in Germany, looks strong. And so we're reasonably confident about the future.
Did your top investors, any of your top investors, say they will participate in the share sale?
Well, we didn't do much in the way of pre-sounding. It's for a rights issue that often isn't the case, but we've had feedback from one of our investors who seems to be quite supportive.
So you think it will go on without a hitch?
Well, it's underwritten. So from our perspective, we feel that we've used some of the leading banks in the world. They've given us their seal of approval and underwritten. And I think Marcus Schenk and I are going to conduct the usual roadshow, but we feel pretty confident it'll be fine.
John, talk to me about your asset management unit. So we've seen 6 consecutive quarters of net money outflows. This is not an ideal condition when you're IPOing part of it. Are you expecting positive net flows in the current quarter?
Yes, and when we reported our fourth quarter results for 2016, we actually said we'd seen a reversal.
Right.
And some of those outflows were a little bit technical, not to give an excuse, but we saw them particularly in our money market funds in the US when the government switched the rules to variable net asset value. And then we'd had a couple of very successful strategies in ETFs, and asset allocators just reversed that strategy. So we weren't too worried about it, but we're seeing a turnaround.
And the turnaround, so the trend will continue being positive? Well,
the investment performance in Deutsche Asset Management, one of the reasons we want to give it more prominence is its investment performance has been outstanding. And over 70% of our funds are above benchmark in the 5-year time horizon, and that's a tremendous performance. I think sometimes the division doesn't get the prominence it deserves, which is one of the reasons why we want to bring it to market.